Hello everyone, welcome to Cheongfuli Weekly Report. Here we bring you the latest China's steel market prices and analysis every week. This week, the spot prices of steel products have declined. The domestic spot price of hot-rolled coils dropped by 30 yuan per ton this week, and the price of rebar fell by 70 yuan per ton. At the macro level, the United States has extended tariffs on China for another 90 days. It is expected that there will be continued games over related issues. With the implementation of tariffs on other countries, the demand for related bulk commodity trade may decline. On Thursday, the US July PPI annual rate recorded 3.3%, significantly exceeding the market expectation of 2.5% and reaching the highest level since February, which led to a decline in market expectations for the Federal Reserve's interest rate cut in September. Domestically, the anti-involution sentiment has cooled down, and prices of some commodities have fallen. However, due to the continued policy support and the existence of the September 3rd parade commemorating the victory against fascism, there are still expectations of production restrictions for coking coal, steel, and other varieties, providing certain support for their prices. On the industrial front, the weekly output of the 5 major steel products remained stable, and molten iron continued to stay at a high level. By product category, due to the decline in profits, the increase in electric furnace production for rebar has slowed down. This week's output growth was mainly in medium and heavy plates, driven by the improved demand from the engineering machinery sector. On the demand side, the weekly apparent demand has begun to decline, with an overall recent slowdown. The average weekly decrease was 147,200 tons, with the demand decline mainly occurring in the construction materials segment, while the demand for coil products had certain support. In terms of inventory, the accumulation of the 5 major steel products accelerated this week, with an overall inventory increase of 406,100 tons, mainly in social inventories, which also reflects the seasonal decline in demand. Meanwhile, the pressure on factory inventories has started to increase. In summary, entering August, the weight of macro factors has decreased. The bullish sentiment towards bulk commodities is not as strong as in July, and fundamentally, steel demand is already in the off-season. In terms of profits, steel mills still enjoy good profits for the time being, and there is no significant pressure for large-scale production cuts. At the same time, with high molten iron output, raw material prices still have certain support. Due to the expected reduction in the supply of finished steel and coking coal caused by the September 3rd parade, there is no expectation of negative feedback trading under the current inventory situation. Looking ahead, if the demand falls too fast, leading to an accelerated inventory accumulation, spot prices may decline further in the off-season. For procurement, it is currently recommended to purchase only as needed. From the institutional perspective, the market expects flat steel demand during the off-season, with steel profit margins remaining reasonable. During the military parade, major production areas have implemented production restriction measures, and short-term steel inventory is relatively low. Although the daily consumption of scrap steel has rebounded and the decline in molten iron output has been slow, resulting in poor transmission of the negative feedback mechanism. But the driving force behind price increases has weakened. Therefore, steel prices are expected to be mainly in a consolidation trend in the short term. In summary, the recent expectation for steel prices has been revised, and they are mainly expected to fluctuate weekly. For specific varieties, plate products, steel billets, etc. are recommended. Okay, feel free to leave your thoughts, questions, or any related inquiries in the comment box below. And if you found this video valuable, don't forget to follow us for more updates. See you next week!